Hey everybody, John back for another video of my trades on the morning of November 4th. Pretty crazy day in the market. I swung 6 SPY 379 calls from end of day yesterday. That's Thursday 11/3. Also for Marathon Digital $11 calls. So all night, nice, coming up, coming up, coming up. I work nights, so I went to bed around 7, told my wife to get me up at 9 because I had a feeling I was going to sell right at market open. I'm glad I slept through this huge red candle right here at 8:30, all the way from 375 to 369. That would have been a total bummer to actually see, but not be able to do anything because the market's closed. But anyway, you can tell right here 9:30 marks this candle right here. So we came up right before open, came up even further, then hit 3790 on the ES1. I realize this is an ES1 chart, not a SPY chart, sorry, but it's basically the same thing. SPY is just a little bit lower. So if you're at 3790, you think it would correspond to a SPY of 379, but it's not. It's really like 377.70 or something like that. So you bounced off this candle right here. That's when I started looking at the 1 minute chart. So you can see 9:30 market open. Candle number 2 comes in red right away after a wick up and a push down. And when this candle right here crosses the bottom of this green candle, that is a get in a put position. So what does that tell me? That's time to totally bail. Because if I'm going to start buying puts, I do not want to be in calls. So I totally bailed. Six of the 10 contracts I sold immediately at open. Then I sold 2 here and I sold 2 here, just in case we hit this wick and there's a little bit of a support or resistance zone here. Once we hit that, now I was like, okay, I'm fully out. I sold out of everything. So as you can see, it looks like that was a pretty good sell point. Awesome, well-defined sell points. Bottom of this wick on the way down, bottom of this wick on the way down. I lost a little bit of profit on 4 contracts, but I really cashed out on the 6. So all in all, super pleased about the way that went. You can see it came down and hung around the 50 EMA for a little bit, and then it decided to fall down even further. So where we're going to bounce off to 200, I don't know. But what do I like to call this zone right here? This zone right here with these huge down dojis, those are called gravestone markers. I call that hammer time. So hammer time is when you are in the middle of a move and it looks like the bulls are trying to get back and they get rejected. Bulls trying to push up, rejected, rejected. And then you can see this thing starts sliding after the bulls lose control there. So continuation of the chart, that was our hammer time right here. You can see it fell well past the 200, all the way down to the midpoint between our pivot points of support 1 and support 2 is off the chart. That is nowhere to be seen, probably down around 368. So at this point, this is what you call the Johnny Cage nut punch area, where you just take it in the sack and like it because you should have sold. But notice the difference here when the market is going down, right? You got a nice, this is a staircase down, not an elevator, what you like to see. But this point right here, you could have told yourself, well, hey, I have a 222 reversal, right? A nice little, but the thing that's wrong with this setup and why I did not buy right here and think we were going to reverse was that this is too steep of a downturn. These 2 candles down, down. You usually don't get like a V notch. What you like to see is this right here. A nice rounded bottom, just like your mama. When this baby rounds and you get your John Wicks down, then you get that explosive up. That's when you clear this candle right here, which happens to be right at the midpoint. and you get a nice shot right back up. So remember, don't necessarily trust your reversal signals after a strong push in either direction. You want to round it out and show that this is consolidating, and then when you get your confirmation candle, this would have been a great spot to buy. And I know that's a great spot to buy, but I didn't do it. And I should have, because look at that baby rip all the way up. A small zone here of consolidation, gathering steam for the next push, and it did push. And it pushed all the way up to 377. So, what a crazy morning. Right back where you opened up. I mean, that is insane. So, I cashed out way back here. And I'm really happy I did, because this is what I paid for my contracts. This is what I got, subtract them, and that's a nice little $500 day off of buying at the end of business yesterday and selling out like in the first 3 minutes today. So the interesting thing is, you can see I sold my 10 contracts, and the average price was $105 basically a piece. And that's when I sold out at like, 933. But if you go to the top of the area here, I was curious, what is the price per contract at this zone right here? What if I held this whole time and then was like, oh my gosh, I'm right back where I started, let me sell? Well, that would have been a total bummer, because you can see the asking price to buy that contract at 376.37 is only 56 bucks. So that is a factor of implied volatility on the day, how much volume is coming in, how drastic the changes in price, and the different gamma factors, theta decay. The longer it goes into the day, the more the price has to move towards your strike price to really get a solid gain. It has to be so dramatic the farther you get in the day to the end of the close of the contract. That was a great sell by me. I'm totally happy with this trade. It was a bit scary over last night, the way it started dipping overnight and then coming back, but I saw everything I wanted in the market to have a recovery today, and I sold instantly, because look at this shit. I had no idea what the hell was going to happen, but these red candles gave me great sell points, scared the crap out of me. Lock up your profits and call it a day. All right, everybody. Hope you enjoyed the video, and I'll see you later.